Hey, it's Market Moves coming at you. Tonight we're going over Tilray's earnings that just came out today. This is going to swing the stock wildly. Stay tuned, it's going to be great. So the goal tonight is to go over Tilray's earnings that just came out on March 18th. We've been waiting a long time for these numbers finally to appear, and they have. So what we're going to do is we're going to go over the report, decide if it's bullish or bearish. I'm going to throw the numbers into our pot stock Excel sheet, and we're going to see where that puts Tilray on the list as we update those revenue numbers and maybe the share count. We want to see if it makes it cheaper or more expensive on the pot stock Excel sheet. So if we look at Tilray right now, we are one of the most expensive pot stocks out there if we're looking at price to sales. It's a good metric. It's actually 3 times more expensive than some of these middle stocks here. If I look at it from my value score, this is my own metric I made up, then it puts Tilray at still the 5th highest or the 5th most expensive pot stock. So still right now we're looking at a pretty expensive pot stock. If these numbers are high revenue wise, it could drop this score down a lot. So stay tuned till the end. We'll check out to see how expensive or how cheap this stock gets. And I'm going to open up the sheet right away and we'll just go through it. So the first thing I see is we have a revenue 110% up from the prior year. This puts us at $43 million for the fiscal year of 2018. So I know ACB and CGC are bringing in this much per quarter sometimes. So 43 million is very, very low in my opinion. It is a number that some of the bigger names, like I said, are bringing in consistently every 3 months. So keep that in mind. That number in general is very low in the overall industry. And we're just going to head down here to the highlights of 2018 where we saw that revenue number. We know that happened. But total kilograms sold are up twofold. So we sold 6,000 kilograms compared to only 3,000 kilograms the prior year. So how does this compare to the leaders like Canopy and Aurora? They are selling well over what Tilray sold in 1 year. They're selling 10,000 per quarter, 7,000 kilograms per quarter. So Tilray compared to the leaders is very small. I want you guys to understand that. They're not selling that much. The revenue's not coming in as much. And these leaders are taking away from the overall industry. They're just taking off now and they're just getting more customers. They're getting more acquisitions. And this is how the ball starts rolling and how they start picking up speed. So overall, we are looking at a pretty bearish report in my opinion, especially since we are overvalued in general in the pot industry for this company Tilray. And we're also having net loss of $67 million for that 2018 year. So we lost $68 million. We didn't sell as much as the leaders. We sold maybe a fourth of what they sell, and our revenue came in at $43 million. So I'm going to plug that in real quick on the pot stock Excel sheet. Tilray, we have the revenue I had in there was $38 million. If I change that to 43, it still puts us very, very high on the list. I don't think it changed us at all from price to sales. I think we are still the 3rd most expensive price to sales company. And then our value score, we are still yet again in the top 5, top 6. So I'm going to look through this earnings report some more. And right here, what I came up with next is the 4th quarter results. These are kind of the ones that came out most recently. So 4th quarter, it kind of shows us the speed of the company in the most recent time frame. So if this company is increasing their marijuana production the fastest right here, we can kind of expect that to continue in 2019. And if we get a percentage-wise gain of this quarter for the next 3 or 4, it can give us a better idea of where we can be. So it looks like revenue went up 200%. So we brought in about $15.5 million. And if we go up another 200%, going to be looking like $45 million at the end of the year possibly. So 1 quarter, we might be able to bring in $45 million if we keep this crazy growth rate. And the leaders, yet again, I'm just going to show you the revenue numbers. If I sort this from highest revenue to lowest, we have CGC bringing in $135 million for the whole year. ACB is bringing in about 80 million. So if Tilray can bring in 80 to 100 this year, it would drop that cheapness factor a lot, or the expensiveness factor. And I think that's going to be huge. I think they are getting into this market a little bit late. I do think they're going to have that growth this year, and the numbers are finally going to start ramping later in the year, and we're possibly going to see them comparable to the top 10 in the industry. So we also have total kilograms sold up threefold, from 700 kilograms to about 2,000. So the kilograms sold went up 3x, and then the revenue went up 2x. So those are huge multiples right there. I did not see this growth. I will point this out. I did not see this growth with ACB or CGC. Their numbers were not up this much. So this is a company that looks like it's growing the fastest in Q4, which would be my only bullish argument for these earnings. But the overall stock market is not enjoying these earnings, because pre-market or post-market, after the earnings were released, the stock is not up huge. So these earnings are not positive to the overall stock market so far. We'll see how the market opens up tomorrow and handles them. And the one thing that kind of excited me about this stock is that they had a partnership with InBev, very close to NBev. It's very confusing how there's two different companies doing the same exact thing. So InBev, they want to partner with to make THC CBD beverages. And I do think this is a great investment for the company, and not many people are getting into this space. And like I said, when the first product comes out there, it's going to have this huge advantage in the market. And I do think NBev has that advantage. And I do think Tilray, if InBev can get it out there quickly, I do think they're going to get a quick advantage in this market. So they want long-term revenue sharing agreement with this Authentic Brands company. And they also want to partner with them and focus on those CBD beverages. So it seems like that whole market, that whole segment is pretty big focus for this company. And like I said, I'm very bullish on the CBD THC beverage segment. I do think that's going to be huge, and not many companies are getting there. Not many companies are getting there fast enough. So I do like how Tilray is pushing the buttons on that. And now here are the numbers. These are going to open up light on the overall company in the last year, the last quarter. It's going to let us know what they're doing with their money, if they're being smart, if they're having good margins, bad margins. And I'm just going to let you guys know what I see right away. So for the 12 months ending in December 31st, basically fiscal year 2018, we brought in about $14 million for gross margin. So off of $43 million for revenue, that would be about a sixth of it. So let's say that's 20%, 15%. That's very, very low. Some of the leaders are bringing in 30% gross margin. So we want to see 30% come in. That is a number that is just very attractive to investors, especially in this industry. If you're not bringing in 20 to 40% each quarter, then you're not going to hang around long enough to attract investors and grow fast. So 2017, it looks like we brought in 11 million. So that was a 50% gross margin. So our gross margin shrunk a crazy amount from 2017 to 2018. And we had almost zero gross margin for 2018 in the last 3 months. And this is barely up from last year. So off of a $5 million revenue income on 2017, 3 months, we got about 3 million in gross margin. But when we brought in 15 million, which is 3 times that amount, we only brought in only 200,000 more. So we're not bringing in much more, but we tripled the revenue. So there's something there, something happening with the cost, and I do not like that. I don't know what's happening. I don't know where this money is going or how much cost is going into their products, but this is not great for the company, especially if you want to see this cash go back in and safely support and reinvest it into the company. This is not good. So this gross margin amount needs to increase the next quarters for me to be interested at all and call this a good investment. And as we go down to the net loss, I just want to point out this one number. I don't want to go through each segment telling you what happened where. Yeah, we basically lost 31 million in 2018 for the last 3 months. And this is about half of what we lost in all of 2018. So in 3 months, we lost half as much as we lost pretty much the whole year in 2018, and we only lost $7 million in 2017. So this company looks a little bit lopsided. It's losing more money, it's getting more money in revenue, and it's not keeping enough of that. So I really want to point out the share count next, but I'm just going to dive into this sheet real quick. Assets, liabilities, make sure the company's healthy. Just going to go through the bottom line stuff. So total assets looks like $600 million, and we have total liabilities coming in pretty close to that. So a 1-to-1-ish ratio is not the best thing for a company. You want to see their assets doubling or tripling liabilities. It just makes the company safer to hold as an investor. So this company is borderline unsafe to hold just because of liquidity problems that could possibly happen. So current liabilities coming in at $25 million, current assets coming in at $550 million. So the current section is huge. It seems like they have most of their money there. They have $480 million in cash. This is crazy. So although it's lopsided on the total assets to total liabilities, it is completely safe and exciting on the current assets because this is what they can use right now. This is if any debt has to be paid off, they can easily do it because they have $48 million in cash and only $28 million to pay off in the next 6 months to a year. So I don't know what they're going to do with this cash, but having a cash pile this large is pretty awesome for this company. And I don't know what they're going to do with it, like I said, but this opens up every door to where they could be in other countries, what segments they can get into. So that is another reason I'm bullish on this earnings report. So the overall revenue numbers, the cost numbers were not exciting, and I actually did not like them whatsoever, but the cash they have on pile, to me, is pretty exciting. So if they know what to do with it, and they know how to maybe cut down the costs on production, maybe they can cut down the costs of everything else they're spending money on, then this money could be worth it. But right now, this company is showing they do not know how to manage their products and gross margins, and they just don't know how to bring in cash to the company from selling products. So it's cool that they have money, but I want to make sure they know how to use it. So this is the last thing I want to do is check that share count, make sure it didn't go up or down too dramatically, and we'll just compare this company again to that Excel sheet to see which one's cheapest and most expensive. So did a quick search and I just found the share count is pretty much the same as the previous quarter. So that is great. They're not increasing the shares on the market. They're not diluting investors. That's the biggest concern of why I check the share count. So I'm just going to sort the share count on my Excel sheet just so you can see where this lines up. Tilray, we're at 95 million. So I'm going to pop that back in there and resort it. So 95 is the most current share count, and that puts us on the, let's say, top 6 on the lowest share counts. And I think share counts are huge if you want to see the company rise really quickly on an uptrend, because like I said many times before, if the share count is low, the market cap goes up slowly when the price goes up. So if market cap goes up slowly, then that's the price, the overall price on the stock, the overall cheapness, expensiveness of the stock. So if the stock is getting less expensive or not, if the stock is not getting expensive quickly, then this has more room to run to the upside. If the share count is high, then the stock's going to get expensive real quick when it goes up. That's basically what happens. So share count pretty low. I like that. And if we sort this yet again, you can kind of see we are an expensive pot stock even after those earnings came out. So Tilray putting us at 62 for our value score. I just want to point out my favorite pot stocks out there are CanTrust and ACB, and I also like NBev. And CanTrust and Afria and CGC and ACB, pretty much the leaders, are considered the cheapest pot stocks out there. And I'm very excited about that. And I do think there's still opportunity in them. I mean, CanTrust, and we also have, let's say, ACB just hit $10. I do think we have $15 in sight soon. So a lot of cool things happening, and they're still very cheap comparatively in the industry. So This is all I got on Tilray's earnings. Please share this video. And I want to point out one more thing. If you want this sheet, you can get it. It's in the bio. This sheet, I give it out to anybody that wants it. This is just sign it up and it'll be sent to you automatically. This is all I got. Market Moves signing off. Peace.